Today we're talking about green energy finance, and to help me unpack it, I'm joined by two very special guests, colleagues of mine from ACCA Global Council, Ayla Majid and Joseph Owalabi.
Thanks, Brendan.
Thank you. Great to have joined this conversation.
All right, so let's get straight into it. Ayla, maybe if I turn to you first, could you give the listeners a bit of an overview on sustainable finance, and what is it and why should we care?
Yeah, sure. So first of all, just to sort of look at that, what are the challenges that the 7 billion plus population of the world has? And of course, sustainability and climate change and the climate related risks, they are absolutely huge. If you look at the next, for the next decade, the kind of risks, so at the top 5, all of these are climate related. And most of the countries, they are signatories to United Nations SDGs. So SDG agenda when it was set out, and the Paris Agreement in 2015, there were goals set up. And there's of course huge amount of finance needed for that. But we collectively as the world, we are really lagging behind on achieving these goals. So sustainable finance comes in place. So essentially this is about making investments and creating tools that are not only looking at a financial return, but there is an ESG lens, the environment, social, and the governance lens. And why this is needed, because the amount of capital needed, that's absolutely huge. I'm sure most people have heard this number of 2.5 trillion annual gap. So if sustainable finance doesn't come in, and essentially this is patient capital, this is capital that is looking at lens, or the ESG lens. And it's extremely important to address this climate concerns, but later we can sort of elaborate on as to how it sort of benefits stakeholders in terms of the financial returns as well. So just to sort of a quick overview, we need it and we are already late. So yeah, it is just the right time to have this conversation. Yeah,
and energy is obviously a key part of the emissions that are causing climate change, and so obviously the need for green energy financing is an important part of the solution. So Joseph, maybe you could give a bit of an overview on that specific market and where's the opportunity in that?
Yeah, thanks, Brendan. I'll just pick it up from where Ayla stopped. You know, there's that huge gap that needs to be fixed. But more importantly, you need to consider that about 60% of current issuances goes towards renewable energy. So you have organizations like Bloomberg estimated that last year would have about $350 billion being raised from things like social loans to green bonds and all of that to help finance some of these green interventions. Another body in the UK called Climate Bond Initiative actually helped raise about $260 billion last year alone. So this year they're looking at about $350 billion US dollars. And it's good to note that the Climate Bond Initiative has at the core of their purpose to be able to mobilize over $100 trillion to help finance some of this gap. So that's huge and that's big. You know, if you've been following the news recently, you'll also see Airbus, a key producer of aeroplanes, coming out to say by 2035 they would produce their first zero emissions aircraft. Right, so and they hope to be able to cut in half the industry's emission by 2050. So a lot of this is coming from what Ayla said, from some of those global goals that have been set by world leaders, private sector, public sector, entrepreneurs and industry, SMEs, to help reduce some of this global emissions. So it's actually huge. We can't really put a figure at what our market is, but we do understand some estimates are being, we need between 1 to 2% of global GDP to actually fix some of these issues. So that's what you find in, some publications from the UK. But what we do know is that the challenges are real. So if you go to places like India, major economies like India, China, and across Africa, some of these fast-growing economies are being powered by coal. So, and if you look at most of the emissions that's coming out of that, even agriculture, you'll be surprised. Some of the industries and the huge contributions they make to global greenhouse gas emissions are huge. So the market is big, and there are a lot of challenges to unpack there.
Yeah, I'll just add to a number to what Joseph said. So there is with regards to the climate bonds. So the estimated market as of the climate bonds issued up till now, there's one number which is about 1.4 trillion, and only in the last decade, and I believe this is a number coming from the climate bond initiative, that in the last decade, just the green bonds number is about $520 billion. And obviously, whoever raised these bonds, whoever invested in these bonds, they are making a lot of sense. There's a lot of return as well. And another push that is coming from, and now, although it's not seen in sort of all the policies yet, and going through this COVID situation and major economies sort of rolling out the stimulus packages, there's been very little investment or allocation towards green investments. But if we look at the behavior of the large oil and gas players or large energy companies, they have really realized that BP has set out an agenda that by 2030, they will invest over $60 billion to invest about 33 gigawatts in renewable energy. And the current, the current market value of BP is around $80 billion. And the last 2 years, they've actually lost majority of the market value. And the companies who've gained market value, it's companies like Iberdrola, the Spanish utility. They have, I think, close to 70–80% market cap has increased in the last 2 years, and they own assets, something like, I think, around 33 gigawatts, something close to what, actually little less than what BP is aiming to. Then a Danish company, Ørsted, they gained about 135% market value in the last 2 years. Yeah. So those are all the kind of sort of business cases that make sense too.
So these are all the big players coming out to look out for this investment dollar as well. Mm-hmm. Yeah, right. Yeah. So if the sort of emerging businesses are making money on it, now the big players are coming in and they're going to look for those dollars too. So
definitely,
I had a bit of a worry that this sort of thing would go off the boil a little bit because back in the GFC times there was a lot of talk about climate change. There was the Copenhagen Agreement, but then as soon as the GFC hit, it sort of fell by the wayside, and then there was there was more important things to look after, and government funding was put into propping up banks and getting the economies running again, and I sort of had that fear that maybe that would happen through this process as well, through this pandemic created economic situation that we're about to run into. So it's good to hear that those big organizations are looking to really play in that market. Is there any sense that this might go off the boil from governments, that they won't be interested in promoting green energy and green infrastructure?
So I'll just briefly sort of respond to that, and Joseph, I would like to hear your thoughts on this as well then. With regards to sort of, different countries have different dynamics. So those who are oil and gas producers, they would look at from a completely different lens because their revenue, their exports are dependent on that. But for all the other countries that are who are sort of net importers, they would be viewing it completely differently.
Yeah.
And something that Joseph alluded to, like what's happening in Africa, what's happening in other developing countries, there is still dependence on coal, and not just coal, there's expensive electricity. So when we sort of bring in renewables in the equation, right now with the battery prices coming down, the technology becoming more efficient, so actually there's that sort of has a direct benefit that sort of flows into these economies, these countries that are importing otherwise fuel. They can sort of bring their costs down by 50%. So every country, like if it's say some of the Gulf countries or some of the OPEC countries, their view of course would be different. But the other half, or so they would be, the other half would be looking at in a very different manner.
That's right. I think I'm looking at it from the sort of Western developed economies sort of perspective, and you know, not thinking about the Middle East when they're sitting on massive oil reserves, and that's the mainstay of their economy. And then the other emerging economies that are looking at cheap fossil fuels to drive their economic growth. So, yeah, there's different pockets are going to have to deal with it in different ways. Joseph, did you want to jump in on that?
Yeah, and I think, you know, again, I agree with Ayla. There's so many ramifications and perspectives to this. There's a political lens, right? And so if you look at countries like the US and Trump, you know, coming out of that, there's still that negation of the whole essence of climate change. And he doesn't believe that, you know, climate change is real. And so where you have fires in California, you know, engulfing, you know, hundreds of thousands of acres now, and people are dying and loss of property, there's still that denial when scientists in California are providing evidence and the president doesn't want to buy that. And you go to countries also like Australia, where a lot of people get it, but also depending on what side of the divide, you know, if you're a Labour or you're a coalition, you know, depends on how you look at it. So the political will definitely would play a good deal. China has come forward in the last week or so to say they plan to also address climate change by 2060 or something. And everybody's saying that's too far. The planet would not exist by 2060 if we continue the way we are going. So you would see that the political undertone will drive things a great deal. But that it's not all, you know, gloom and doom. Like we said, the major players, the likes of World Bank and regional banking organizations are very keen on this. Investor groups, you know, the banks, different organizations are coming up as issuers. You know, again, when you go to Middle East, the likes of, you know, Aramco and all of that capitalization, are they going to want to, what are they going to do with those assets? If they've capitalized, you know, all of those assets thinking they'll get economic benefits based on the asset prices, are you saying they should impair all of those assets? Some people have also come up with the idea of transitioning investments rather than say, okay, we shift from, you know, fossil fuel to renewable. We'll need about a 10 to 25 year gap where we want to help stabilize that move. And so they are saying, should we have gas help? You know, not so, you know, gas is not necessarily the perfect solution, but they're saying, should we deploy gas? It's a bit cleaner than the traditional fossil fuel, while we'll get to the point where, so these are some of the conversations that are happening. But I think a critical part of that is where you have civil society, and we saw a lot of that over a year ago before COVID, where young people took to the streets in major cities around the world, and they keep making the case that you can't keep doing things the way you're doing it. For our generation, there might be no future, there might be no planet Earth. I think that's a major driving force. Young people are, you know, they are really very vocal, they're assertive, they want to sit at the table, they're choosing what kind of brands they associate themselves with, from fashion brands to clothing to governments. They decide that by the vote. You saw how that played out with Hillary Clinton and Bernie Sanders a while ago in a Democratic Party primaries in the US. So we'll see young people. I think young people would be the deciding factor eventually, because the politicians would try and buy time all the time. But young people insist, and I think investors will listen. because most economies have a huge population, apart from Europe. If you look at Middle East, Africa, the huge population is the youths. 60% of Africa is young people. If those people demand change, I think we'll move closer to the promised land.
Yeah, I've we all have altruistic and high hopes when we're young, and then you get into the cycle of having to you have kids and you buy a house and you have to pay your mortgage, so you have to go to work, and that sort of thing dilutes your value system a little bit sometimes unless you watch out for it. But I do think the driving force underneath this is that the technology behind renewables is becoming cheaper. So the price of renewable energy technology is now becoming competitive. That's not to say that they couldn't take off all the subsidies off the fossil fuel industry and maybe make that balance out a little bit more. So I think the drive of the youth to want to work for organizations that have got a sustainable value system, and even beyond the youth wanting to work for organizations, but suppliers who want to supply to organizations, customers who want to buy from organizations, they're all looking for these sort of green tick. They want to know that they're doing right by the planet. And I think I just pick up on your point you said earlier on there, Joseph. We won't have a planet. Well, the planet will be fine. It's the humans that will have the problem that we need to solve. But I think just go beyond the employees part of it, the young people working for organizations and associating themselves with brands. What about the shareholders, the investors? Tell me what they're looking for. Are they representing the youth? Is that where their money is coming from?
Of course, we've seen that, in places like Australia, in the last 2 weeks, we've seen what happened with brands like Rio Tinto and BHP and Westpark. Investors usually are laid back. When you deliver the earnings and, the yield, they're okay. But we've seen investors being very vocal, changing the entire management of some of these organizations based on, things like, transaction involving, child trafficking, and in places like Rio Tinto, using heritage sites and Aboriginal land and destroying some of that. So you've seen investors now, being careful. They're also careful about the reputational damage that can come from associating themselves with being not caring for the environment. It's not a good messaging. So you've got activist groups like Greenpeace and some of these very vocal groups, across in Germany, they'll go shut down a coal plant. They'll just go, they'll go against all, even if you put police people there, they don't mind being arrested. They just go and just cause havoc. And the press will follow all of that. The media will follow all of that. And the share price, we've seen examples, case studies across the world where your share price tanks, from Volkswagen in the US, MTN in South Africa, across the world, various examples. So shareholders know this already. They're aware of anything, even if they don't believe in it. Even if they don't believe in it, they're like, oh, my money's going to be there if these young kids come, and it's just too bad publicity. They don't mind firing the CEO, the CFO, anybody, because they know, they've seen it over and over again. They know how it plays out. So I think right now people are very wary of reputational damage, and they know the market is very volatile. Capital moves freely and easily. And it starts with even false rumors. It might not even be true. And somebody just says, oh, you guys did this. And before they find out the real information, the share price has tanked. So I think that's also playing to the advantage of these civil, NGOs and groups.
Yeah. So it's the reputational damage or the reputational risk. Of not going down this path. But there's got to be financial returns to it, right? I mean, Ayla, do you want to pick up on that? There's got to be a financial return on investment.
There are actually, and just to sort of look at that, organizations are not looking at only the shareholder group as their stakeholder. Now the concept is of sort of managing the stakeholders, which includes everyone, not just the shareholders, but who's financing, the employees, the suppliers, the customers, the environment, and I like to add planet as a stakeholder as well, because at the end of the day, when we look at a holistic sort of a picture, all of these sort of threads are linked. So organizations are listening to this, and it's just that if companies and organizations, they want to innovate, they want to survive, and they want to thrive, they will have to, and a number of organizations are looking at that what are the customers, what is the youth, what are they demanding? We have seen many young activists, many young climate champions like Greta Thunberg and many others who are sort of now part of almost the mainstream voice. So it is not only sort of gray-haired people sitting in a boardroom making decisions. They need to be mindful of that. And coming to your question with regards to the returns, yes, of course, there's a huge financial element to it. If we look at, say, I was reading one of the reports from Accenture, and they had estimated that that prices of different shares pre-COVID, there was a clear trend seen that in terms of the companies that had high ESG agenda or they had high ESG rating, their margins, their earnings were 4.7 times higher than the companies that were low on ESGs, and that sort of translated both sort of in the operating margins as well as the sort of the total return to the shareholders as well. So yeah, so there is a huge financial element as well, and something that I mentioned earlier. Let's look at the stock prices for how the oil and gas shares have behaved compared to the others. And there's another number that I would like to share, which I read in a recent report, that if the oil price is something like at $60, the return on invested capital would be, then the return on invested capital would be 12%. Otherwise, it is below that. Yeah, right. And we don't see oil prices, even if we look at the last 10 years average, it was, I think it was $77, the average last 10 years price. So the investors are, of course, very concerned, and they should be rightly concerned as to what is the return that invested capital is generating. And if they have an alternative, which is not only financially lucrative, but also ticking the box of ESG and making all the stakeholders and making the future stakeholders happy. Yeah. And it's just a no-brainer, I think. And all stakeholders and those who are not looking at this, it's time for them to really up their game and wake up. This is the reality.
Yeah, I mean, I've had some conversations recently with treasurers who are raising money on international debt markets, and they're saying it's there's no question that you've got to have a green agenda, sustainable, driven organization. Otherwise, you're competing for funds that are looking for that, and it's very hard to get them if you don't have that, if you're not on that page. I'm trying to save power by having my timer switch go off, but I didn't realize it was going to go off in the middle of this recording. But we'll bear with it. We'll call it my contribution to climate change. So I suppose what I'd like to do is we're taking this idea of return on investment here. I mean, let's bring it into the accountants world. So talk to me about the role of accountants in this sort of changing dynamic from old fossil fuel energy driven systems into the green energy and the financing around that. Joseph, I could just turn to you. Maybe you could just talk to that point.
Yeah, thanks, Brandon. There's a lot of opportunities for accountants. Rightly said, from policy formulation, helping the various stakeholders, from government to issuers like the corporate organizations, to help them think through what the framework would be, having a policy. So all of it is set at very high level, but you need to be able to cascade that down to, governments, federal governments, states or provinces and local governments. What does it mean for different layers of government? And even within the organization, right? So what does it mean for the board, right? What the audit committee, should they be aware of? How does that impact on our audit risk? How does that impact on our organization corporate risk? Do we need to revisit our risk register? What are the climate-related risks that needs to be part of our financial disclosures? And so there are many things to really unpack in this. So accountants have a role to play. I tell people, you know, when you study accounting, there are two main conceptual basis that you talk about: going concern, right, and accrual. That's powerful. No other profession teaches growing concern and accrual. And those concepts, especially also considering materiality, helps you think about the things that really matter. And so when you think about sustainability, you find that you have a lot of people in media relations and investors. They're not necessarily accountants. They understand putting all the narrative together, but sometimes investors have complained there's too much information. Can't make sense out of it. But if we bring our knowledge of things like materiality into place, then we can say, okay, of all of this information, of all of this impact, of all of this environmental, social issues, which of these are actually material? So if I'm say, you know, an ExxonMobil, what should I be worried about? Should I be worried about water? Is water a major issue for me? No, it's not material. Should I worry about, you know, safety of my people? Probably that's material. If I'm a Coca-Cola, should I be worried about water? Of course. I should be worried about the impacts I have on communities, their access to water. And so I think accountants have a critical role to play, because we also understand how to measure things, from financial reporting down to management reporting. We understand all of this. So our ability to get things measured, what is not measured cannot necessarily be accounted for. So accountants have a role to play, from the governance structures to the reporting to strategy, you know, helping organizations, countries come up with a plan, a 5-year plan, 10-year plan. You know, a lot of these governments need to develop climate-friendly, climate-smart cities, buildings, infrastructure. They need that policy to be in place to drive the agenda across different governments, across different political structures. So accountants have a role, key role to play there, but there's also that knowledge gap, right? So a lot of people don't want to get into, they're like, okay, I don't really, what's green? It's not a typical debit and credit. And so there's that, you know, initial hindrance or, you know, obstacles to want to upskill. And that's where it's critical for professional organizations to support members. And we're seeing a lot of that coming out of the UK now with the Green Finance Climate Education Charter, which the UK government is pushing with a number of professional associations like ACCA, CIMA, ICAW, and what have you, CFA. I think that will be critical to move the entire finance profession along that journey. If you put as part of the curriculum for qualification, as part of CPD for members, then it doesn't become so much of a gray area.
Yeah, I think one of the things you're touching off there as well is the developing those skills around storytelling, and not just to present numbers, but to actually tell the story behind those numbers. Use the numbers as the backup for the story, but to really tell the story and to I suppose bring those things about materiality and sustainability into sort of common language. Ayla, is there a danger that accountants will sort of fall back into the you know, sort of the bean counting compliance? Like, I think reporting disclosures is probably an important part of this whole piece of work that accountants can do. Is there a danger that they become still stuck in that, or you know, can they possibly become leaders in this area?
I mean, it's about how you sort of approach the problem and how finance professionals approach the problem. Finance professionals certainly have an edge, as like Joseph explained, like different tiers of the decision making, whether it's the strategy, whether it's at the governance level, or whether it's sort of managing. So finance professionals and those who are working on strategy, they certainly have the visibility. Now it really depends on how do they want to sort of implement that, and there's actually, there are lots of frameworks with regards to measuring impact or measuring sustainability. And at times, people do get bogged down, and accountants probably get bogged down as well. We need to sort of comply with matrix A, matrix B, or we need to sort of comply with a number of sort of lists, etc. There are interesting initiatives ongoing to sort of come to a common metrics. So there is the World Economic Forum, along with all the big four. They earlier this year they launched a report with regards to how to sort of come at sort of like a common ground. And there are organizations like Bank of America and many others. They're sort of leading this. In fact, the CEO of Bank of America, Brian Moynihan, he's sort of leading this particular initiative. So yes, there is work ongoing in terms of streamlining, but accountants and finance professionals, they really need to be mindful as to what the end goal is. Is to provide more visibility, which then feeds into the strategy. And I really like your comment with regards to the storytelling, because we as human beings, we can relate to something if there is a story that is told to us as to where we are, and our actions are going to sort of put us in a situation that, say, in a few years' time, where we will be. And we need to sort of build narratives around whatever we are doing. Yeah. And I'll just add a little bit of my sort of experience or my impression of this. Like, we are all managing things virtually. It is great to be connected. And I'm really enjoying this conversation, because here we have this sort of having a brainstorming, a sharing of ideas. But a number of times when we are doing these virtual meetings, we're just sort of ticking the box, and we just immediately sort of targeting the task at hand. But all these important conversations, the side conversations, the brainstorming, sharing of ideas, that is so important. And at the end of the day, we as human beings remember this. We may forget that, oh, I checked this list, or that was, I mean, probably I'll forget some of the numbers that are quoted now, but probably in a few months' time, but I will remember the story. So and storytelling is very convincing. So yeah, that's very important, I would say.
Yeah, no, that's great. It's I'm very passionate about it. I've done sort of read a lot about things like the hero's journey, and about, you know, what it means as human beings to transform. And I think as a society, we're going through one of those very major transformation periods right now, and you know, it's often builds fear and uncertainty, and you know, nobody knows what the future is going to hold. So it's about pulling together and telling stories like we did around the campfires years ago, you know. So it's yeah, it's I like the storytelling narrative. I think so we're probably up on time. What I'd ask, maybe if you guys could maybe give a takeaway for the listeners, if there's something that you'd like to leave them with that they can take away and help them move forward in their careers as accountants, or whatever their role is in organizations. Joseph, can I throw to you?
Yeah, thanks, Brendan. I've enjoyed the conversation, listening to you and Ayla. I think as a pattern note, it will be green finance, sustainable finance is going nowhere. You know, for fundraisers, financiers, they understand that it's a new tool in the mix of other financial instruments. So it's going to be here forever. Right? So we might not call it green finance in another 50 years, but it's going to be here, and it can be social bonds. We have a couple of governments across the EU now raising COVID bonds. So whatever you call it, it's still the same thing, right? Bonds that are focused to address challenges around environmental, social issues, and what have you. So I think as professionals, we need to be abreast of this. We need to upskill. We need to show interest, see how it affects our field. If you're an engineer, if you're an accountant, if you're a doctor, you want to know what are the kind of funds that are available for you to make an impact in the community. So it's a multidisciplinary point of view, and it's an entire set of skill set that is required to drive the agenda for green finance.
Yeah, great, thanks, Joseph. Ayla.
Yeah, so I'll say that all the stakeholders, they need to sort of act. They need to do their put their share in whatever they are doing. We all have this common this planet, and we all share the responsibility of making this sort of last for many, many generations. So each one of us, we should measure our carbon footprint, and we should bring in sustainability in every conversation, in every decision-making table that we are part of, that it should be, this conversation should be there, because whatever we do has an impact. And it is up to us, it is our choice that whether we are making a positive impact or whether it's an adverse impact. And I'll just read out a quote from my favorite environmentalist, Jane Goodall. She says that you cannot get through a single day without having an impact on the world around you. What you do makes a difference, and you have to decide what kind of difference you want to make. So I think this is an ongoing conversation. We need to be mindful at every stage, whether it is part of our personal lives, whether we are doing anything professionally. Yeah.
I love it. I love it. Take responsibility and have an impact. Okay. Look, thank you, Ayla and Joseph, for everything on that podcast tonight. Your contribution and insight was incredibly valuable. I mean, I'm relatively naive in this, in terms of my knowledge of the whole area of green energy finance. I mean, I do have a green heart, and I want to save the planet and those kind of things. But I don't have enough understanding of that area. So you've really enlightened me. Thank you very much. So if you want to find out more, you can follow Ayla and Joseph on LinkedIn. Have a look at the work of the World Economic Forum that they're doing on green energy, and of course the UN Sustainable Development Goals. And finally, I'd also suggest downloading some of ACCA's professional insights on this topic at www.acccaglobal.com. So thank you, and see you next time.